Hello, welcome to the Lagos Trader channel. This is going to be a quick update on Bitcoin for the day. As you can see, I'm on the 4 hours channel, 4 hours trading time frame. So what is happening here? What can we see? We're in this range for a while, and then a breakout, confirmation, refuse, unable to break this trend here. So a retest of this bottom. So this is forming like a flag after breaking out from this weekly trend line. Let me show you. This trend line has been holding us down for the past 1 year, a year now, and we just broke out of the trend like a week ago, and confirmation now this week. If we are able to close at above 21,000, this will be a good confirmation for change in trend. It doesn't mean we are out of the bear market. We are not. I'm not saying that. For us to confirm that we are out of the bear market, at least we should break and stay above 25,000. Even at that, we can still fall into range markets for at least a year, 6 months. Okay, that's not the point. So what we can see here is the breakout from this flag, from this channel, and we're expecting to confirm to retest this channel. You should know this line. This line is not, it's not a line, it's a zone, in the sense that anything can happen from, yeah, it's a region. So it doesn't mean it has to bounce on this line, but as long as we are not falling below this bottom line here, we are still in a bull trend. And as a day trader, how can you benefit from this? We now confirm that we're in a bull trend, obviously. So we need to trade with the trend, and we need to think of going long more than going short. It doesn't mean you can't go short. There's no one promising that. Like, for example, you bounce from here, you test this line again, that's 2 line already, and you see a rejection candle, this rejection candle here, you can see even this spin back candle, and once you get something below this candle, you can go short. If you had went short from there, let's say something like this, go short from here, right? Risk to reward 1:1.5. Yeah. The stop loss behind this line, and go for 1:1.5. Right. Good. You managed to get yourself a good trade, right? But you don't want to go short in a bull trend. You want to go long. That same example being considered, let's now check when we go long from here. See, after this test and this bounce, right, you can confirm it a bounce even just by drawing trend line from here, right? You see, rejection, and once you stay, you get a confirmation above it, then you go up, you go long. You would have definitely see a good risk to reward ratio there, right? So let's delete this and go into the 15 minutes, because as a day trader, we mostly tend to trade 15 minutes, 5 minutes candles. So that's what we are going to do now. So we are looking at this trade zone. Definitely, once you come into your chart, you want to check for trade zones, and this is a trade zone. This is a trade zone, and let's see a bigger picture. And there's a trade zone here, so I'm going to identify the trade zone so we can know what we're doing when we're in a smaller time frame. Another trade zone here, right? In case you like to know what I'm using, alternate H to identify, and you can set this how you like it. Okay, so now I'm going to the 15 minutes candle. So what am I saying? On the 15 minutes candle, there was a rally here, and this is like a flag. It's like a flag. So you can call, some call it correction. It's correction. The correction is forming a flag, right? So all we're doing is waiting for a decision. If you're trading 5 minutes, you can be trading this channel. Well, if you can get a rejection here, you should go short. But I won't advise it. There's nothing interesting there for you to trade. What we are searching for is a break of this channel going up. Then that's a break of flag, and the price target will be something like this. If we're using A equals to AB equals to CD, right? Where is this cloning of this? Okay. The price target will be something like, let's say, just on the conservative side. Price target should be around 22,600. Also, you can see it's very close to the area of value here, right? Nothing is guaranteed. We only trade what we see. This price target is just what it is, price target. There's nothing confirming we are going there, right? So on the 15 minutes, what do you want to trade? Once you break out of this trend now, and you can see a confirmation, right? You just break out of a resistance. Then you can go long. Then your stop loss will be something like this. Let's say you go long here, right? Your stop loss should be below this last support, and then you can target risk to reward of 1.5, right? Something like that. So we can target 21,600. That's one plan. If it's confirmed, if it goes the way we are planning, it's like if it's break this bull flag, the first option you have is to trade like this. But if it break below this bull flag, what are you supposed to do? Like I said previously, when we are checking the 4 hours time frame, as long as it doesn't fall below this channel, right, and they don't fall below this line, let me draw the line to indicate it here, this line, yeah, if you're not falling below this line, right, I'll paint that red, we are still in a bull trend. So this flag can extend to this place until it bounces. But once you see that bounce, definitely you will know. Once you see that bounce, you can start targeting trading, going long on the 15 minutes time frame, right? On the 15 minutes time frame. But as like I asked earlier, what if it's break below this channel? I won't still go short. Reason being that I'm not a trader that looks to go against the trend. I just try trade what I'm comfortable with. Yeah, unless I see that there is enough space for me to trade. But see, as you can see here, there is a bouncing zone here. There's another zone that price can bounce from. So it's not enough for me to. Yeah, maybe if it fall below this and it forms a structure for me to set my stop loss, because I don't like my stop loss to be too big, so I can take better reward compared to what I'm about to risk. Okay, this is my RSI here, right? Usually I don't use RSI for anything outside aside confirming divergence and seeing what the market is presenting to me, right? Oversold, overbought, I don't usually use it because this is 15 minutes or 5 minutes. Market can be oversold for a long time, right? It can be oversold and still going up, and overbought and still going down. So it's just to give me a picture, to paint a picture for me. Like, see, for example, you see, yeah, there is this high and this high, but on the indicator we can see that as it form, price is going higher on the price action, right? See, check it out. We are getting higher highs, all right? The highs are getting higher, but what about on the indicator? The highs are getting lower. So what does that mean? Yeah, this is just like an early warning sign that the indicator is going against the price, which means the momentum is fading, right? And what we see a correction here. It doesn't have to work. It doesn't have to work, but there's nothing guaranteed when you're trading. There's nothing guaranteed. So you just want to see what is presented to you, and without being sentimental, but like following your technique to the T. So what can we see here again? In order not to lose anything. Okay, that's it. That's it for now. We are looking to go long. We are looking to go long. We are not searching for short now, and most of this area of value we identified somewhere around here, or yeah, right? So is there any other thing I can see here? Yeah, there's one trend coming from here. There's a trend coming from here. Let's see if it's yes. There's a trend here. So I'm gonna change this color. On the 1 hour candle, we can see it clearly. So you can use this as a structure also. If you get a bounce here, a rejection of this trend line, for example, look at the rejection here. The candle come there, it's rejected, it retested, rejected, and form. Let me make it bigger and clearer. You see, candle came here, right? It bounced again, forming something like an head and shoulder. This is the shoulder, head, and shoulder. And once it break the neckline, you can see, once it broke the neckline, it's confirmed. It's a super long, right? Good. And your stop loss will be somewhere around here, right? Your stop loss is something around here. So, and risk to reward, even though 2 to 1 or 1:1.5, you're in profit now. And that's how to go about it. Every day I'm going to be releasing short videos like this in order to explain the market structure, the current market structure, and how you can benefit from the market volatility. So if this is interesting to you, like, subscribe, click the notification bell button so you can see my video immediately once I uploaded it, because these are time sensitive. So do have a good day. Bye.